All right, hello everyone, and welcome to this episode of 22 Minutes. I am Jason Bates, the lender portion of this show, and is Stephen Cotton, the realtor side of this show.
Oh,
And he didn't showcase his big mug, but that's all right.
oh yeah.
I don't even know if he has that.
Yeah, I should have.
Yeah,
Next time. It'll be.
Next time.
I'll always do this moving forward. This is how you'll see me the first time. Oh, am I on?
That'll be your stick. So
Yep.
we hope to bring both entertainment and education to you about real estate and the real estate market here in Arizona. So if you're watching us on Facebook, please message us, like our page, share with your friends and family. Really would appreciate that. All of you out there on Periscope, give us some hearts, give us some love. Follow us there on Periscope. And if you're watching us on the replay on YouTube, be sure to give us that thumbs up and share with your friends and family as we try to bring you all the valuable content that you need when purchasing a home. So if you are looking to buy, sell, or refinance a home here in Phoenix, we certainly would love the opportunity to talk to you today. Not tomorrow, today. We want to talk to you now.
Yeah, I'm busy tomorrow, so let's do it today.
Yeah,
tomorrow not looks so good.
Yeah, tomorrow I'm pretty booked up. Hey, with that, let's get to today's tweet quote of the day because we got a lot of stuff to cover in this episode. Okay, this tweet here, it might be a little hard to read. Hopefully you can blow it up here. This one is from Prime Quotes on Malcolm Forbes, actually, is the person who wrote this famous quote here. And it says, education's purpose is to replace an empty mind with an open one. So education's purpose is to replace an empty mind with an open one. And that's what we're going to hope to do for you today is educate you on VA loans.
I think it would even say if I could fix that because I'm a fixer-upper. I would say education's purpose is to replace a closed mind with an open one.
There you go.
Because people come in with their misconceptions about stuff, and then so they're kind of closed-minded, and then you open it up, and not that their mind is empty, but.
Absolutely. All right, so let's do our little intro and let's get right to some of the questions that we get asked, okay?
It's getting sunny.
All right, cool. So today's show, as we mentioned earlier, it's all about VA and the veteran. We just had, obviously, I think Veterans Day or whatever last month.
Mm-hmm.
And so we get asked this question here in Phoenix. There's a lot of veterans here. Arizona in particular is just a lot of veterans here. A lot of retired veterans here. A lot of them in Sun City. A lot of World War II veterans in Sun City. Yeah. And of course we have Luke Air Force Base, Williams Air Force Base. We have the Army Proving Grounds down in southern Arizona. We have the Marine Corps Base, MCS Yuma, where I was stationed at. So there's a lot of military influence here, and of course, Senator John McCain is famously known as a hostage during the Vietnam War.
Right.
So a lot of veterans here in the state of Arizona. I'm not saying there aren't a lot in other states, but we do get asked a lot of questions about VA and VA loans and how that works and how you can use that benefit to purchase and property and all that kind of stuff. So we want to try to cover that. So where do we want to start out here? Because
it's not even just that there's a bunch around us. I'm literally 4 miles away from the Air Force Base right now. Yeah. I see a veteran every day, or active duty. I'd say about 20 to 30% of our business is VA loans. So we do quite a bit of it here on my team and in my office. So it's just one of those things where a lot of people don't know what they don't know. And so, where do we start? I guess we start at the beginning.
So let's do that. So what does it take to qualify for a VA loan, right? So you got to be an active. Well, you can be a veteran or active duty service member.
Yeah. Now,
if you are active duty, there are some requirements. You have to have served at least a total of 90 consecutive days. So for all the National Guard members out there, that sort of thing, you have to be on active duty for at least 90 days. Or 6 years of service in order to use it. So there are some requirements. Most veterans kind of know when they fit that parameter. If you're full duty active service and you were honorably discharged, you are eligible.
Let's talk about that certificate that they need.
Yeah, so certificate of eligibility is what you would get. Now, I know when I was discharged, I got my DD-214, and then I had to apply to get my certificate of eligibility. I, as the veteran, had to do that. And then I handed that to the lender. Now, in today's environment, technology, just hand your DD-214 to the lender, and the lender, through their portal, through VA, can pull your certificate of eligibility in most cases. Some cases you have to apply for it yourself, but that's pretty rare in today's environment.
So, so the first step is the DD-214. That's how you qualify. You give it, you give it to Jayson. And how long would you say once you have that to put it in the portal for that letter of eligibility? Like 5 days, 10 days?
No. I mean, electronically, if it's all, given the normal kind of thing, it's not an unusual situation, within 5 minutes.
See, there you go.
Literally.
I mean, people think it's 5-10 days.
Used to be. I mean? It used to.
Yeah.
It did. When you had to mail it in, it did have to. It was 5-10 days, and in extreme circumstances, it can't take that long. But again, you're the veteran. You typically know that already.
Right.
But
that's the funny part. In the extreme circumstances, it can take up to 10 days.
I know.
Ooh, that's so hard.
You are dealing with the government here, and sometimes it's hurry up and wait, is what you used to always say.
Yeah.
Okay, so it doesn't take long to find out if you're eligible. Now, what can you expect as far, what are the terms? What does the loan look like, as an example? What do I need? What are my minimum requirements? You need to have, and let's talk about Fico scores here real quick. Most lenders look at a minimum of 620 credit score, although VA really doesn't have minimum Fico scores. However, most lenders in today's environment use what they call DO or DU or LP. That is the portal that is an underwriting engine for Fannie Mae, Freddie Mac. And so when we throw those through that underwriting engine, I haven't seen too many get approved below 600. I've seen quite a few 600 for me, but not all lenders are at 600 threshold. Some of them are at 620. That's why I mentioned 620. But 600 is kind of the floor, if you will, for FICO score requirement for a veteran.
So that's a key point too. A lot of people think you need like a 700 or a 680 or something.
Yeah.
So 600 isn't that bad. I have above 600, so that means most of you probably should have.
Right. And I forgot to do something here. I forgot to put the VA or the emblems here. I got the emblems playing here above us.
Oh, okay.
So there. And the other thing too, I want to kind of preface here. Just because you have the lower credit score does not mean that you get a higher interest rate. VA loans have typically a better interest rate than what you're going to get on a conventional loan. On average, they're about 0.25% better than what you would get on a conventional loan. Right. So just because you have a lower FICO score doesn't mean you're going to be paying more on an interest rate. In addition to that, you don't have mortgage insurance, which is a huge benefit. I can't stress that enough. That increases your purchasing power immensely. Go ahead.
Well, I was going to say, let's give them some numbers, because our house is we have a $280,000 house.
Yeah.
And with our mortgage payment, we're paying just a little bit above $1,500. Mm-hmm. That's crazy, because if I were to go FHA and buy a 280 house, my payments would be probably $1,800 or more.
Right.
And then you take that 280, and plus we got it for 0% down. You know what I mean? That's the other thing.
Right.
And if you got 0% down with an FHA program, then you're probably spending almost $2,000 a month.
Right.
Because it's a 4.5. And then the conventional, using that 280 again area, you're probably paying $1,650 a month or something for the same. So we're using our VA eligibility, we're saving about $150 a month, maybe a little bit more.
Yeah, it's a big deal. It's really a big deal. That's the one big attraction to VA loans, is not having that mortgage insurance, which helps that affordability. And with these prices going up as they are and predicted to do in the near future, that's a big deal. The other thing too, I want to talk about closing costs. Let's talk about closing costs, because this is the other thing that we get asked.
Closing costs.
Yeah. Are they more expensive?
Last call for alcohol. Oh.
Yeah.
Different song.
They more expensive and all that kind of stuff.
Right.
So short answer to that is no, they're not. They're not more expensive. And in fact, there are certain costs that a veteran cannot pay for, and certain ones they can pay for. So I have a little list here of some of the costs that a veteran can pay for and cannot pay for. Appraisal fee, obviously, the veteran can pay for. Compliance, credit report, recording fees, prorated taxes, that sort of thing. Big ones here to really note are 1% origination and 2% discount. The veteran can pay for. No more than that.
Okay.
No more than 1% origination, no more than 2% discount. And that discount has to go to buying down the rate. So it just can't be arbitrarily put in there as a junk fee, a quote-unquote junk fee. Now, unallowable fees, this is what I get asked about more often than not from realtors, and that is a lender's appraisal. So if we didn't like the appraisal for whatever reason, that we were to receive, that the veteran paid for. The veteran can only pay for one appraisal. If there's a second one required, the lender has to pay for it or somebody else has to pay for it. So if the seller didn't like the value or something like that, sorry, you pay for appraisal then on your own. A lender's inspection, if we require some type of inspection as per the approval, we have to pay for that. Settlement fee, escrow fee, that's a title fee. The veteran cannot pay for that. Document preparation fee, underwriting fee, processing fee, veteran cannot pay for those things.
Okay.
So here, where I'm at now, the company that I'm with currently, we don't charge an underwriting or processing fee or an origination fee or a discount fee to the veteran. Other lenders, what they do, a little trick of the trade here, is they take the underwriting fee and the processing fee and they move that into that 1% origination fee. Okay, so they still charge the fees, they just move it into a different category.
Okay. And so this is the question I get all the time because I was told it was a no money down, no closing costs. You know what I mean?
Yeah.
And so a lot of people have this misconception that I don't even need to put money down. Well, you put $500 down or $1,000 down earnest, and then they get all that money back. It's not necessarily the case because you did. Now, I always say my job is to try to get that full $1,000 back. And so what I usually do is I ask for about 2% concessions. Mm-hmm. And it seems like 2% concessions catches that whole umbrella of what the closing costs are. And then my home inspectors and my termite inspectors, those are costs to the buyer. And it's not regardless of VA or what, but what I'm able to do with my guys is they don't mind getting paid until close of escrow. So $275 for the home inspection and $65 or $70 for the termite. You don't have to pay that up front, but when you close it, then I kind of slide it into those closing costs. And if I got that 2%, then you do get that full $1,000 back. You know what I mean? The $1,000 earnest I mentioned earlier. The first appraisal at $450 or maybe $500 now. The appraisal fee, that's there, and that's an upfront cost. You know, I hear some people don't charge that, or maybe we can encompass that as a rule here at the Cotton Group. That would be nice of me. Maybe I should do that. How about I do that? Can I do that? Can I pay for somebody's appraisal?
Yeah, absolutely. You can pay for the appraisal.
All right. Well, you heard it here first.
There you go. So give us that thumbs up. He's going to pay for the appraisal.
Wow. If you come in a VA qualified, I'll pay for your appraisal on the property to get you that.
And mention this show. Mention this show. And that would you heard it here first. Hey, I heard on your show that you'd pay for the appraisal. I think that'd be pretty cool.
Yeah, I say, I was drunk. No, I'm just kidding. No, I'm not. No, but honestly, I will. I'll cover that cost. Just let us know that you watched our show on 22 minutes or you heard about it.
Now, the other thing too, in regards to you mentioned concessions, right? Seller concessions on a VA loan are up to 4%. Okay, FHA is up to 6%. On a VA, it's up to 4%. Okay, anything above that is considered to be excessive, and they really don't like that. Funding fee. Let's talk about the funding fee or the guarantee fee. You may refer to it as a guarantee fee. So that is a part of the closing costs, and that is something the veteran does have to pay for. This is what guarantees the loan against any potential default in the future. And this is also what gets rid of the monthly mortgage insurance. So it's a guarantee fee, not a funding fee like an FHA. FHA is insured loan, where a VA loan is a guaranteed loan against potential default. And they guarantee 25% of the loan. That's how much they guarantee, or they'll cover 25% of the loan. So here in Maricopa County, maximum loan amount currently today, before January 1st, is $417,000, which is the maximum conforming loan limit. On January 1st, we mentioned on the show in the past that loan limits are increasing. Well, so too for the VA. VA is going up to $424,100 as of January 1st. So you can get a VA loan up to $424,100. Now, it doesn't stop there. If you're in a high-cost area, VA will cover up to the high-cost amount. So people in California, maybe at the 629, something like that, that's considered conforming. VA will cover that. And it doesn't stop there. VA actually has a jumbo, right? It doesn't stop. It keeps coming. So VA will go up to in jumbo amount. So as I mentioned, it's 420 or 25% of the loan amount. So on a $500,000 deal, if we use 417 as the loan amount on a $500,000 purchase, let me look at my notes here because I wrote this down. On a $500,000 purchase, 417, subtract out the 417 from the 500, leaves $83,000, which then you gotta put down 25% of the $83,000, which is like 20,000 some change, which actually represents 4% of the $500,000.
Right.
So it's actually less than 5% that you would have to put down on a typical 10% on a jumbo. Right. Yeah. So it is a good and no mortgage insurance on top of that. So you can get a jumbo on a VA loan. You have to put some money down, but you can get a jumbo loan.
Yeah. So that's something that we don't ever talk about because I had a client that bought a house for like $435. He came out of pocket the difference between the 17 and the 35 when all he would have needed to come out is about maybe $5,000.
That's correct on a VA loan. That's correct.
And there, on the jumbo program, there's no mortgage insurance still, right? Because it's under the VA umbrella, even
correct.
for that. Wow.
Correct. So this is where we're trying to enlighten you.
You've enlightened me.
Right?
I know a lot about the VA, but that's good, though. Because, and the other thing, because you brought up the fact that on January 1st we can go to 424 and 100. But can I write a contract today for 424 or 100 knowing that that'll close on January 15th? And be approved?
Well, I think the appraisal has to be after January 1st because we have to have it goes into the VA portal and stuff like that. So everything's going to have to be dated after January 1st. So
well, it'll be about that time anyway because we have a 10-day home inspection that puts us on 25th.
Well, I'm even saying the contract. I may have to be because it's a VA contract. So everything's going to have to be after. There's no literature. I haven't seen any literature on it. So just to be safe, I would say, let's wait till after January 1st.
It's 2 more weeks.
Yeah. The other thing, too, here, I think it gets overlooked, too, condominiums. Condominiums are kind of a hot thing here in Arizona, right? VA does do condominiums. There's a list of approved condominiums that the VA maintains. And by the way, too, I want to kind of put up here on the screen here, if you want all this information, if you're out there looking and want to know your benefits, you can head over to va.gov. There you go. Sorry about that. You can head over to va.gov and then go to benefits and then scroll down to home loans, and then all this information is on their website as well. So I thought I fixed that. Sorry about that audio problem there. So there you have it. If you need all this information, it's right there on the VA website.
Michelle said she couldn't hear you as well. She threw the comment out there.
I know.
Can you hear us now, Michelle?
Yeah, she can hear us now.
Okay.
Our audio's good. Okay, so you can buy a condo, townhomes, single-family homes, obviously. But condo is the big one there. I think that gets overlooked because those are affordable. As prices increase, I think there's going to be a lot of interest in condos. Just be sure that you get with the right team and prepare yourself when putting an offer on a condo because not all condos are equal. I can't stress that enough. I don't care what the listing agent says. I really don't care. A condo is a condo. Sometimes I'll see on the listing that it's a townhome, but then I look at the legal description and it's a horizontal regime or a condo. So whatever the legal description is what the property is. I don't care what it looks like. So stress that enough, because a lot of people have been caught by that. Another thing too that I want to kind of put out there.
Well, I just want to say, for me as a realtor, I do care what it looks like. I mean, is it nice? Is it moving ready?
Oh yeah. No, you want something presentable,
Yeah,
right.
Yeah, right.
The funding fee. Let me touch up base on that, because we're running out of time too. We got 2 minutes left here. First time use for a funding fee or guarantee fee, 2.15%. That gets added to your loan. So a $100,000 loan, 2.15% is how much you're financing. Added to that. Okay, so $102,150 or whatever it is.
Yeah.
And then that's with zero down. If you use it the second time or a third time a VA loan, which you can, as long as the first one is satisfied correctly, paid off in full, then you can get your VA eligibility reinstated. It generally happens automatically. The second funding fee, if you use it a second time, is 3.3%. So they kind of discourage it a little bit from you using it. It's meant to get veterans in homes, and then you use the equity of the home, to purchase your next home, right? But you can, if you need to, you can use it a second time.
We've used our eligibility, I think, on 4 houses.
Yep, I've used it twice myself.
Okay.
So the other thing too that I want to talk about, just a side note here, real quick. There's Native American Direct Loan. It's NADL for Native Americans in the VA who served. There's adaptive housing grant programs. So if you're a disabled veteran out there, there are grants out there that can help retrofit a home to fit your needs. So that's pretty cool. I think that's really, really cool.
Let's explain that a little bit then. I mean, if we have a house that's maybe 1,300 square foot single level house that's selling for about $100,000 here, $150, but it's not designed for the handicap or like a wheelchair accessibility or whatever the regime. This loan will get that stuff. Maybe build the ramp up the stairway. Do that stuff.
Yeah,
well, that's great.
Yeah. So if you're a service member or a veteran with certain permanent and total service-connected physical disabilities, you may be entitled to a grant funds which can help enable or maintain your independence. 3 different grant types can be used to purchase or construct an adaptive home or modify an existing home to meet your needs. So
I think that's even more important. If they don't even want to sell, they're already in a house.
Yeah.
Let's get them that grant so they can keep on keeping on.
All you got to do is reach out to us. That's all you got to do.
That's simple. That's simple.
Is that simple?
And I'm going to be paying for the appraisal.
The other thing too, I want to kind of put out there too, and this is for wives of veterans, especially surviving wives of maybe deceased veterans, because spouses can be eligible for VA benefits for housing. There are some requirements, and those requirements are: the service member is a prisoner of war or missing in action. The veteran died while in service from a disability as a result of service, and the spouse has not remarried. Very important, has not remarried. The veteran was totally disabled and has died through the disability, though the disability was not necessarily did not cause the death.
Okay.
So then you can take advantage of your deceased spouse's benefits and purchase a home under the same parameters.
I don't like the word "take advantage of." Just take advantage of.
I guess that's right word.
Yeah, but they're eligible.
They're eligible for it.
Yeah,
the other thing too, when you're a disabled veteran, that funding fee I mentioned, the 2.15 or the 3.3, is waived depending on the percentage of disability that you have. So that even can save you even more money as a veteran. So
let's talk about this. I know we're way out of time probably. We could probably do this again next week if you guys like to continue. But let's say you're 30% disabled. That's what they give you the percentages. Does that mean 30% of that funding fee?
No, it's and I forget the percentage. I got to be honest.
Sure.
But if you're permanently disabled or 100% disabled, and I think it's like 75% disabled, the funding fee is waived completely.
Okay.
So you have to reach a certain threshold, and it's just waived completely. It's not a portion. It's not a percentage for percentage kind of thing. It either is there or it's not there.
Okay.
Okay.
All or none.
All or none. And the funding fee is dependent somewhat on your service as well, because it can range, like on an interest rate reduction loan, as an example. That funding fee is 0.5%. So you're not going to pay 2.15 or 3.3
Right.
when you're doing an interest rate reduction loan, which is referred to as an EARL, which is you can do a cash out refinance, interest rate
Right.
reduction. It's kind of like the FHA streamline kind of deal. So that's a whole nother segment. This was just based on purchase, and we didn't even talk about contracts. I mean, there's so much involved
Right.
with VA loans. We just ran out of time. So our apologies.
So next week's episode, I think we wanted to talk about the first-time homebuyers, but maybe just do a part 2 of this. If you want. I mean, because next week we talked about it being a light week anyway because of the holidays.
Right.
Let's just finish up where we started. That way they can. So if you found this show beneficial, next Thursday we'll finish talking about the VA. And if you have any more VA questions, then let's get those out of the way too. Because next week, because there's just so much to talk about here. Just a little
tons.
time.
Yeah, tons. 22 minutes is just not enough time. So write those comments. Please participate on our Facebook page. Write those comments. We'd love to hear from you guys. Like and share our page. Head over to Twitter. Follow us on Twitter. Our Twitter handles are right up here. Follow us on Periscope. Give us some of that love out there on Periscope. And then also give us that thumbs up there on YouTube. As we always say, this show is all about trying to inform you and give you the knowledge that you need when you're looking to buy, sell, or refinance property here in the state of Arizona. So if you're looking to do that, hey, reach out to us. We want to talk to you pronto. All right, we're out of time, guys. I know we ran late. Sorry about that. Take care, everyone. We'll see you tomorrow. Take care.
I'll be here.